Okay. So hello, everyone. Thank you for joining us. And we trust you and your families are keeping well and safe. I'm Kenny Leon with the Canadian Construction Association. Before we begin the webinar, just a quick reminder, you can ask questions on the chat box and right throughout the presentation, so you don't have to wait till the end. However, the questions will be answered at the Q&A session at the end of the panel discussion, just to keep things smooth going through the conversation. And of course, promise we will answer them right at the end of the discussion at 2:45. On the call today, we have our experts, Derek Nighbor, President and Chief Executive Officer, Forest Products Association of Canada, Ed Whalen, President and CEO, Canadian Institute of Steel Construction, Bart Kanters, President, Ready Mixed Concrete Association of Ontario, or called Concrete Ontario, and finally, Mary Van Buren, President, Canadian Construction Association, who will be moderating today's session. Over to you, Mary.
Thank you. Bonjour à tous et toutes. It's a pleasure to moderate this panel with our experts today. As you all know, the industry has done an outstanding job in adapting to the health aspects of COVID-19. And this was done through collaboration, sharing best practices so that we all raised the bar, construction could continue safely, with the priority being on, of course, the health and welfare of our workers, of their families, and of the community. And certainly as we enter into the second wave of the pandemic, we need to maintain vigilance on those standards. And we're also starting to see some new issues emerge, and particularly around supply and potential disruptions in the supply chain. So our first question is, let's sort of understand where these materials come from and what are some potential blockages or pain points in the supply chain. So why don't we start with you, Ed, and tell us a bit about what's happening with steel.
Good afternoon. Thanks, Mary. With the respect of steel, I think everybody knows that steel is a global commodity, whether that's a good thing or a bad thing. And it's produced not only in Canada and the US, which is the majority of where our product in construction comes from, but it's also sourced from Europe and other parts of the world. The majority of it, as I mentioned, comes from Canada and the US. But we do in Canada get it from other parts. And for those that are interested, for structural steel anyways, we procure no steel from China. So if there was issues in the past in other product materials, we didn't have that issue with structural steel.
Thank you, Ed. Let's move over to you, Derek, and tell us about the supply chain for forest products.
Yeah, so as far as the Canadian picture goes, about how, and I'll talk specific to lumber because, as many of you know, we're an integrated sector in the pulp and paper space as well, and those chips that are left over at our sawmills feed those pulp and paper mills and help produce some of those downstream products. But for the Canadian picture, about half of our lumber comes out of British Columbia. That's notable, and I'll talk a bit about this later. But we have seen significant pest disturbance, significant fires in 2017, 2018, and the chickens sadly have really come home to roost in terms of production numbers in BC lately. So we'll get into that a bit later, but I think that's the big picture. We're right across the country. We export about half of what we make in Canada. A big chunk of that going to the US. And not a lot of imports coming into Canada. We see a bit, but we're pretty self-sufficient. But that US market, the lumber mills in the US can only satisfy about 75% of their own demand. So they're pretty dependent on us as well. And just to give you a profile in terms of how our goods get to you and get to the customers in terms of tonnage, forest products are about 10% of total freight on rail in Canada. We're about 25% of what's on trucks in Canada, and we're just under 25% of what's going out of the ports in Canada.
Thank you. If you don't mind, a little quick follow-up question in terms of the supply to the US? Is there flexibility if Canada's demand increases to keep that at home, or kind of how does that work?
Yeah, it's actually one of the questions we got from some of the residential home builders in Southern Ontario, worried is the shortage because you're selling more to the US. And actually the export numbers didn't show that. It was pretty flat and pretty even. I was actually looking at the production numbers in July, and in Canada, production was only up 2% and demand was up 5%. In the US, production was up 8% and demand was up 10%. So you know, I'm happy to get into it a bit, Mary. I think has been a supply problem in Canada, which has kind of exacerbated the problem. Also remembering 2019 was not a great year in lumber markets, and we're still subject to the softwood lumber dispute, which is creating another host of challenges for our industry.
Well, thank you. That provides some context that it's not just COVID-19 related, that there's some environmental issues impacting the industry as well.
That's right.
So Bart, maybe you can tell us a bit more about your sector.
Love to, Mary. Thank you. Obviously, ready-mix concrete's unique from the standpoint that we deliver it in a plastic form and it takes a couple hours to harden. So there's a lot of interaction between the general contractor or the placing contractor and our industry. From a raw material standpoint, we really have 4 primary raw materials. So aggregates and sand and stone and water, that's all local. So again, there's over 1,000 concrete plants across the whole country. So we're in every major community. From an admixture standpoint, produced generally in Ontario and Quebec, but available throughout the country. And then from a cement standpoint, we've got plants in BC, Alberta, Ontario, Quebec, and Nova Scotia. And we import about 10% of our cement from external sources, but we also export cement back to the United States as well. So from a concrete standpoint, really the limiting factor for us is the location and size of the concrete plant, and then the number of mixers or trucks that we have in order to deliver the product out to the job sites.
All right, thank you, Bart. And maybe we'll get into this, but I understand one of the issues is shortage of drivers. So maybe we can get into that as well. So interestingly enough, on the whole supply chain question, we're hearing 2 sides of it. On the one hand, we're hearing that the industry might have thought that there would be a much worse situation with the supplies, given, you know, some industries were completely shut down, obviously workers sick, border issues. And so in some ways quite resilient. But now we're also hearing that it's starting to be more obvious that some of the challenges in the system are coming to a head right now. So maybe Derek, why don't you talk about what you're hearing from your own members in respect to their ability to meet their customer demands, and what are some of those implications as we're looking, you know, sort of 3 months and out to the next year?
And maybe I'll start by just talking a bit, you know, March 13th, March 15th, I think was kind of reality day for most of us. And I think at that time we were, you know, are we going to be able to operate? Are we going to be allowed to operate? Is the border going to be open? How sick are my employees going to get? Are my employees at risk of dying? What's going to happen to their families? Are there going to be people to drive the trucks and the trains? So it was absolute chaos that first couple of weeks. I think everybody on the line can probably, you know, empathize or recalls that. So for the case of us in lumber, we saw order sheets collapse. So you know, big box stores, wholesalers were calling us saying, you know, cancel the orders, cancel the orders. We had issues around, you know, when are we going to be declared essential, if we are at all. In Quebec, they initially declared, you know, for hygiene and paper products, they declared the paper part essential, but then realized you can't make the paper unless the sawmills are running. So we had some of that kind of just general government relations chaos happening those first few weeks. And then what happened a few weeks later, so we saw about a 30% drop in lumber prices over those first 4 weeks into April. And then we saw something I don't think any of us anticipated. And I tell friends, like there have been a lot of tragedies in this pandemic, long-term care homes being top of that list. But the other tragedy is how women and more vulnerable workers have been hit with the job losses. So in our sector, I don't think we ever anticipated that home renovation markets, people sitting, working from their kitchen, staring at that bathroom that needs to be fixed, people saying I need to get a bigger house, and having more disposable income to do so. So we saw that surge then in lumber, and we're still catching up. So I think in terms of the disruption and the uncertainty and that challenge to meet customer demand and expectations, there was a significant COVID reality component to that for sure. There are two other, I spoke earlier about the pests and the fires. You know, we have in the last 15 years or so, a pine beetle has chewed up 60% of the pine trees in British Columbia. Those who understand forest management know that our job is to keep forests as forests forever. So if there's fewer trees to harvest, then you harvest even fewer trees. So the allowable cut that we call in our business drops significantly, especially in British Columbia. So there's the fallout of that in terms of just less trees getting into the mills, and too many mills chasing too few trees, to be honest. And then the other side, I'd say, is more of a structural issue. I actually asked, in terms of the transportation infrastructure, we've talked about the trucker shortage, which is a real one for us, but I was looking, we had in late 2018 issues at the Port of Vancouver, then we had a CN strike, then we had the rail blockades in Jan-Feb, then we got hit with COVID, then we had a toilet paper surge, then we had a lumber surge, then we had some performance issues with CN. Then in August, we had the Port of Montreal strike. So there were a lot of other things happening along the chain here. And I hope we get a chance to talk a bit about that reliable future infrastructure in Canada, truck, rail, port, that I think is so critical to our ability to succeed and move goods internally, but also around the world. So those, I kind of chunk it in those three buckets, Mary.
Well, sounds like a perfect storm, or an imperfect storm, I guess. Yeah, lots of factors, and that's very helpful to understand, because as we look at COVID, we sometimes use that as the only lens, looking at the immediate without, thinking about all the impacts that are going on that we need to think about. So, Ed, any comments that you wanted to add in terms of, similarities to what Derek's experience, or completely different?
Yeah, the reality is COVID really never affected the supply chain in steel. It's the way things operate in steel. The mills are usually rolling on on a schedule with their bread and butters more frequently than others. And in Canada, we have kind of an intermediary, what we call service centers, and they tend to have enough stock for about 2, 3, even 4 months, if not longer, in the bread and butter kind of things, or even the rare ones. So with some of the issues that popped up, and just the location of some of the mills in North America, we never really were that much affected by the rail issues. And in addition, the port temporary problems that were popping up here, there, and wherever. So due to the supply chain network and how it's structured, we basically kind of weathered away relatively easy, and it was business as usual in many respects.
So that's quite the contrast between the two industries. So Bart, you mentioned at the beginning that quite localized compared to the globalness of steel and let's say the nationalness of the forest industry. So what are your comments?
Yeah, we probably fit in the middle somewhere there. Concrete's really regionally focused, so there's significant differences from region to region. The critical materials really are cement and supplementary cementing materials for us, both here in Ontario and in Quebec, but it's not consistent across the entire country. And when I step back and look at it, in Ontario and Quebec, we had either full or partial shutdowns of the construction sector at the start of the pandemic. There was a lot of confusion at the start, and I know we had to get some instruction here in Ontario from our own lawyer in regards to what we could and couldn't do, what types of work we could and couldn't do. So there was a lot of concern. And because we are a local product, again, you have to be very respectful of what's going on around people. And here in Ontario, very cognizant of the fact that Premier is stressing the need for only essential work to take place. So our members were telling customers that they couldn't do residential work if you didn't have a building permit, for example. So that also raised some challenges for us in the long run, because March and April tend to be slower months, and that's when a lot of maintenance work typically gets done, especially in the cement industry. And because of the shutdowns, couldn't bring contractors in to do that work. There was a lot of confusion as to whether that was essential or not, and that created problems for us later. So we saw that initial 30% drop in March and April when it comes to concrete production. But once we got into mid-May, and from then on, it's basically been 10 or 15% higher than we would normally see. So the demand has increased significantly. And we've had here in Ontario very favorable weather for concrete placement. So really where we're at right now when it comes to Ontario and a little in Quebec as well, we really got demand for cement is outstripping its supply. And that's one of the challenges that we're facing. So we haven't been in a situation before where we've got rationing taking place, where if someone needs 150 tons worth of cement in a given day, they can only get 135. So what's going to happen then when you're that 15 tons short? So again, it's really putting a lot of need to stress communication with contractors and concrete suppliers to try and work through these shorter term challenges. And if you've got a need for supplementary cementing materials like slag or fly ash, again, there's a lot of demand in the Ontario and Quebec marketplaces for those particular products.
Yes, so we've heard up to 2 weeks delays in getting concrete, and of course in the past it's been 24 to 48 hours. So this is throwing a lot of projects in a tizzy, because how do you manage that when you're not sure if you're going to get the amount you want, and then in the time you need it. So what are customers doing about that? I mean, you mentioned that your members are rationing it, but what are customers doing to try to, let's say, work around this issue?
Yeah, and that's, as I mentioned before, again, as far as the three materials go, there for ready-mix concrete, there's a lot more interaction with the contractor. Again, we operate typically on 12 to 24 hours notice in the past. That becomes a major problem when we get into short supply of raw materials. So now, again, we're stressing, especially for larger placements or placements that have a lot of supplementary cementing materials, we need to know 1 to 2 weeks in advance. Again, what the cement companies are asking the ready-mix industry to do is to let them know of major projects that are coming up so that they can plan for it. Again, it's a very difficult time. It's not like we're shutting down the doors and just saying we're not delivering concrete on Friday or something crazy like that. It's how can we manage the demand and try and be respectful of all the customers that we have out there. So again, that's the challenge that we're seeing that we haven't dealt with before.
Not to put you on the hot spot, and this is new, so do you have a sense of how the industry might be able to catch up with demand? Is it even knowable, given COVID's so unpredictable itself?
Well, I think, again, back to the fundamental issues, the fact that it hit right during the point of the year when demand is lowest and when a lot of maintenance work takes place was one of our big challenges. Again, that maintenance work, you can delay it for a little while, but if you don't do maintenance, things break, and you don't want things to break when you're in a peak output situation. So again, some of the maintenance had to be deferred until June or July, which is not when we would normally do it, and especially not when demand is much higher than normal. But maintenance has to be done or very bad things happen. So that's the challenge that the industry has. So we're, again, when we'll see as the weather moves along, typically, once we get to the end of November, beginning of December, cold weather hits in, we do supply concrete year round, but demand drops off significantly once we get into December, January, February, March. So that will allow us to build more reserves up and be better prepared. But in the short term, we've got some challenges.
Okay, so the seasonality will help to smooth out the demand over time.
Definitely.
Derek, any comments for you on this issue of how to manage the shortage of lumber, and maybe all the do-it-yourselfers will have gone through their list of projects?
Yeah, I think we saw prices on the lumber side really level off in September and start to trend downward a bit. OSB is leveling off now. I think there's part of that is just we're now starting to, we're not caught up, but we are catching up. the seasonality of it. There were a couple of other things too. We, like Bart said, the weather's been really good. So there was a lot of other construction happening. Hurricane season in the US has led to more demand there. We saw, our US counterparts report that, in places like Jacksonville and Nashville, where it's normally really, really hot in the summer, construction actually, there's normally a slowdown in the South, but they picked up. So it's just, now that we're back up online and operating, all the mills that are able to be operating are operating. So hopefully over time, we're going to be able to catch up into through the last quarter here into 2021.
Excellent. Well, I'm sure that's good news. The industry will welcome that. So moving to the federal government and advocacy, our industries have benefited from many programs that the government introduced, whether that was the emergency wage support, and several of you talked about the 30% decrease. So hopefully your members were able to take advantage of that to benefit. EDC also expanded its financial support to non-exporters, and there were other programs as well. So what are your asks from the federal government to ensure that your industries not only survive, but thrive? So Ed, let's start with you. We haven't heard from you in a while.
Yeah, it's interesting that COVID, as I said, hasn't been all that much of a problem. We've been busy as an industry up and down the supply chain, and in many of our mills and then down, we don't have a lot of people. We're pretty automated from a structural steel perspective. So COVID, we were able to operate and continue to do so, and had lots of work up until this fall. I guess one of the things we're concerned about at the moment is we're seeing a tail off and a trending down in new projects. Certainly there is some bidding out there, but projects actually going forward have not been to the same degree as we've seen in other years. So we're quite concerned with that. We haven't, our industry in a large part has not needed to tap into a lot of the government programs, though some for a number of reasons have to a certain degree, but in the major perspective, many of them have not. I guess what we're looking for now is obviously the private sector is somewhat timid to move forward for a whole host of reasons. And we're really looking for the federal government to get their budget out, get the infrastructure spending announced, send that money down to the provinces as soon as possible. Because certainly in our industry, and it kind of led to some of the other industries having problems, we do have a lag time or a lead time. By the time we bid our jobs and by the time we end up with a material on site, there is a certain amount of lead time, which allows us to source materials and so on and so forth. But that also is a risk, certainly right now and running into the winter time, that if projects are only announced now, that's 3 to 4 months potentially in the future before we can really get gearing up on those because it needs to be designed and so on and so forth. So we can't wait. Our industry has a lot of employees across Canada in this sector. And what we're seeing, our biggest concern and risk right now is just running out of work. So from a supply and our supply chain, we got lots of stuff. We got lots of resources ready to move. But we're rapidly running out of projects for us to do.
Yeah, that's certainly a message that we hear is around investor confidence, that many businesses have had some backlog that they're burning through. And as they're looking to 2021, 2022, that confidence is really important so that they can continue to invest in their equipment, invest in their people, and have that assurance that there is some work. So certainly we echo that ask around the economic stimulus coming out soon and to keep that tendering going as well. Bart, what's your ask of the federal government?
Well, you hit the major one, which is the fact that construction is one of the major drivers of the economy. And we really see how investing in infrastructure, it provides local jobs, it sets businesses up for long-term success. And that's really a critical need of all levels of government, whether it's federal, provincial, or municipal, to make sure that we continue investing in infrastructure and support that. You highlighted another factor before. Again, there are new opportunities for employment for many Canadians. We realize it's been very tragic, the job losses in a number of fronts, and we're very fortunate in the construction industry to be in such a strong state right now relative to other industries. But there's great opportunities for retraining. There's great opportunities for getting people involved in the construction industry. For us on the ready mix side, we're looking for drivers. Drivers is a critical shortage for us. And again, we've got great paying jobs, good benefits. You can take great satisfaction out of the work that you're doing every day, seeing projects go up in your local community that you were involved with. And so encouraging governments to support training programs to make that switch over is critical. And then lastly, you get into opportunities for innovation and red tape reduction. Again, one of the things I'll highlight here in Ontario, once COVID hit, we had a lot of concerns about delivery tickets, paper delivery tickets. And working with the Ministry of Transportation and the Ontario Road Builders and the Ontario Sandstone and Gravel Association, within the 4 weeks, we came up with 3 different options for getting the critical information that's required for all construction projects out to the contractors, the consultants, the testing companies, without having to physically pass a whole bunch of paper around on the job site. So again, this has created opportunities. We've been talking about electronic ticketing for years. There's nothing like a pandemic to force you to make things happen quickly. So again, very positive things that we're seeing. And lastly, even the tie into climate change. We've been offering Portland limestone cement in the ready mix industry for a number of years. Again, it's another opportunity to improve our greenhouse gas footprint, and we're seeing a lot of use in that product here in Ontario as well too. So there are some silver linings to it as well.
Yes, and again, the workforce is an issue that we hear pretty much consistently across the country, except in a few areas where their regions have been harder hit economically, such as Alberta and Newfoundland to a degree. And certainly echo that construction is a great career. CCA has launched Talent Fits Here. I don't know if you've seen it yet. And that's our campaign to profile the diversity of the people who work in the industry and the diversity of career opportunities, everything from what you've talked about, from working on a loader to working with drones. So exciting times, but important times to get that workforce in to help build our country. So Derek, I'm sure you have a few asks of the federal government or governments.
Yeah, maybe starting with the pandemic theme and the response programs. I think we thought the federal government's response, number one, had to be helping those displaced workers and their families. So I think, the rollout of the CERB program we thought was excellent, and that was absolutely critical, and providing relief to those people who were really dealt a tough hand very quickly in this pandemic. As I said, we're a very diverse sector, from bioproducts to lumber, from toilet paper to newsprint. So different segments of our membership have been hit differently in different ways. The pulp and paper, newsprint segments, as you can imagine, nobody's in offices, schools are out. Advertising spends are down, so those paper categories just got absolutely hammered. So the wage subsidy program for some of those mills was a lifeline and very, very helpful. I'd say the larger envelopes of the federal government to help big business, and I get the politics of helping big business when small businesses are really struggling, but some of those large emergency programs, the LEAF program, for example, quite useless, to be honest. Just not very responsive to the needs of the companies. I think shifting now to the future, the trucker shortage, that transportation infrastructure piece is a big one for it. We need more sanity along that line. I would love to sit down with CN and CP and the Port of Vancouver and a few other big players along the supply chain to talk about joint strategies and infrastructure investments. If there was a massive investment in the Lower Mainland that's going to help things move through BC better, I'm on board to support that. So I'd love to have a greater window into what the transportation play is in Canada for the future. Trucking is important, but for us, under the climate and carbon agenda, the more we can move on to rail, the better it is. The problem is we've just been limited in our ability to do that. But concurrently, we need those contingencies and a vibrant and strong trucking trucking supply here in Canada as well. We're an interesting industry in that 96% of the lands on which we operate are provincial government lands. So we've got very robust province by province, different rules and regs governing forestry across the country. So when you get into issues like carbon and other issues that have multiple federal provincial layers, and you're getting different messages, and I think when the economy is clipping along, you can kind of deal with that silliness. But when things are tough and tight and you're seeing that duplication and that overlap and unnecessary regulation, it gets very frustrating. So we want to see greater coherence and greater certainty on that working forest landscape. The other interesting thing about Canadian forestry is most countries around the world, it's like plantations or tree farms. We actually have a working forest in Canada. When we do our regional plans, it's with local Indigenous communities, it's with snowmobile clubs, it's with local health authorities, it's with trappers and anglers and hunters. So, I always say it's akin to kind of a residential zone development. A lot of people have different opinions on what it should look like, but we got to bring all the parties together to make a decision based on local values. So that's certainty on the land base, because there are a lot of challenges and different interests coming to play on that working land base. And if we want to protect that ability to deliver Canadian resources for Canadians, we need to have greater certainty on that land base. The other area, and the area where we have a huge opportunity to do more, is on Indigenous economic and social reconciliation. We're now about almost 11% of the national wood supply is directly controlled and managed by Indigenous people. In Ontario, that number is now at 20%. In Manitoba and Saskatchewan, it's over 30%. So hundreds of these Indigenous communities across Canada have an opportunity to get more out of Canada's forests. So that's another area where we're looking forward to working with those communities and federal and provincial governments.
Absolutely. Certainly, even going back to workforce, that's an area where we're all working hard on, is to show the industry as being more inclusive, more attractive to those underrepresented groups, women, Indigenous, new Canadians, and benefit from their talent to help us build Canada. Now, both Ed and Derek, you've had lots of experience with US tariffs. Anything you want to make predictions on what might happen in the next year, or no thank you?
Ed can go first because he's been more successful.
Yeah, that was a reference to we just recently had an anti-dumping case applied against Canada, or tried a case against Canada. We were interestingly enough lumped into the likes of China, and Mexico was kind of thrown in there for good measure as well. I think this is just the mentality of the U.S. They're looking to wall off who gets to play in their markets, but they want to play in others, such as ours. And that's just kind of the way it is. We've seen and heard buy American for many years. And we're seeing that expand not only at the federal level in the US, but also within the states and municipal. So I think that culture is here. We need to realize that it is. And we basically fight the fight when we need to. So we recently won. We won the battle. We didn't necessarily win the war yet against that anti-dumping case. Proved that the local industry, the ruling was that the local industry in the U.S. was not harmed. But as these things happen, the war, it goes on to appeal. So we're appealing it through the NAFTA panel at the moment, and that the thing carries on. With respect to the election, it really doesn't matter, as I mentioned, kind of the methodology and the approach by either the Republicans or the Democrats are very, very similar. Actually, we usually think that the Republicans are more of a free trading kind of party, but with Trump at the helm, that hasn't been the case, and he's been against a lot of imports for not only just steel, but for others. So I think our opinion is that no matter who wins down there, it'll be kind of a lot of the business as usual. Buy America will be strong. Those companies that want in the steel industry to be in the U.S. market will continue to face challenges, but our industry is willing to kind of fight that as the fight comes along.
Derek or Bart, anything you want to add in terms of U.S. impact on Canadian supply?
Bart, anything?
I've got nothing for me.
Okay, so I'll maybe two things. I think just before we get into it, I think I'll never forget April 2nd, because that's the day that those 3M masks for frontline medical workers in Canada were attempted to be blocked by the president. And we immediately started getting calls because people started to realize that it's actually premium reinforced pulp from northern forests that goes into medical paper that, you know, is kind of goes out of the country and comes back into Canada in the form of a finished product, which is unfortunately all too common here. And it has brought about a conversation about how can we better leverage these resources to do more. So I hope one of the legacies coming out of this is going to be this made in Canada. We can't be like an America first, Canada first. Well, we're too small a nation. These are, you know, we're always going to be free traders. But we do, I think one of the opportunities here is to see what more can we do within our borders to provide more and provide that certainty for our people. I'm with Ed in the sense that Democratic, Republican, you know, I mean, it's more and more the same when it comes to the protectionist perspectives of trade. For us in softwood lumber, this is lumber 5, we call it. So this is the fifth dance we've done. It was 2017. So in the last 3 years, we have about 4 billion Canadian dollars just sitting in the US Treasury. And that's money that can't go into innovation and worker programs and hiring new people and whatnot here in Canada. We go through this process of I call it, it's more of a creative writing process with the US, then it gets into kind of a political process, then it gets into actually some of the legal work that needs to be done. So following a couple of administrative reviews, we are expecting the tariffs in November to go down on average from about 20 to about 8 or 10. So that's going to be some good news. But that $4 billion that's still sitting there, previously we've got about 80% of that money back. So we are hopeful that if and when a deal is struck, you know, a few days before an election is probably not the time. So we're going to need to let things settle out and see where we're at in the new year. But we're really at the mercy, for us, we're really at the mercy of very powerful US private landowners who have more say over this than the president himself does. So time will tell, but I'm with Ed in that regardless of the election result on November 3rd, it actually probably doesn't change as much as we think it could.
Well, thank you. So we've talked about some political risk, we've talked about environmental risk, economic risk. Let's talk about innovation and technology. Certainly, Bart, you mentioned it, that, you know, for the silver lining in the pandemic, and not just in the construction industry, but in other industries, has been rapid adoption of technology solutions that, you know, had been taking quite a while to get adopted. So we all went through the curve pretty fast. Maybe Ed, do you want to talk to some of the things that you've seen that have changed in terms of innovation, technology, or commitments since?
Yeah, sure. Other than everyone staying at home and doing these Zoom calls, which is a lot of technology that we didn't do as much before. Listen, we're in the steel side of things. We're not going to be 3D printing buildings or bridges anytime soon for a whole host of reasons. But there is some pretty exciting stuff that's been coming down the pipe. I don't necessarily know whether COVID was a spur. It certainly wasn't. But what we're pretty excited about in Canada is what we call steel plate shear wall composite type high-rise construction. This is where instead of a concrete core, this is a combination or composite between steel plates and concrete without any reinforcing rods inside. And a project that was done by a Canadian company just recently within the last couple of years down in Rainier Square down in Seattle. Did 58 stories, typically a concrete core, which is a kind of a leading core system. We take about 22 months. That thing topped off at 12 months. So that's a huge increase in productivity and timing on a traditional high-rise 58-story building as that goes. We're starting to roll that out in Canada. A few more projects are being on the books in the US. And the nice thing about it is that the fabricator was actually a Canadian company. So we have that ability to do that here in Canada. And it's a game changer for not only our industry, but for the developers moving forward. And the interesting thing with that project as well is it was actually done in a seismic zone. So not only is it applicable in other parts of the country, but it started in a seismic, so we can use it for seismic purposes, high wind load conditions, and anywhere else where we're looking at a high-rise type towers situation. So we're pretty excited about that, and you'll see more and more of that over the next coming years.
Oh, it is exciting, especially with everything we're reading about climate change and certainly wanting to invest in sustainability over a life cycle. So that's great. Bart, you were talking about the e-ticketing. Maybe can you talk a little bit more about that? And is there any data that you're collecting as well that's interesting, or maybe expand a bit on that?
Yep, sure. Again, across the country, we've seen multiple concrete producers that have been looking at electronic ticketing solutions as an industry. As I said before, we're as just in time as you can possibly get because of the plastic nature of the product that we're shipping out. So we've had GPS tracking systems on ready-mix trucks for years. What we've seen with electronic ticketing is the ability, when you've got GPS data, then you can pull that information into one system. So the person placing the order can see the total number of orders for the day. They can see the individual trucks that are making deliveries. They can see on a map where they've actually been. They can see how much concrete's actually been placed. And then we do capture some information out on the job site, like time they arrived on site, time it was unloaded, any of the test results that are done. All that information that we would write on a paper ticket and take back to the concrete plant now is collected on a tablet, a little 10-inch tablet in the truck. And then the purchaser of the concrete gets the initial delivery ticket. And then once the truck gets back to the concrete plant an hour later, then any information that was recorded on the job site gets sent back to the contractor as well. So you have complete record information. So we're finally using the technology that's been out there for years to try and address that. And again, we're seeing big communication benefits. I think that's one other thing that's come out of this, is that we're all learning that we need to communicate a lot more often, and we're seeing improved systems there as well.
And so that can really help with your real-time information delivery, as particularly in this shortage time when you're really trying to closely manage your supply. I can see that would be a huge benefit. Yep. Derek, how about you guys?
Yeah, I'll be quick. The pandemic did necessitate, I would say, more efficient processes and streamlining. And for us, how do you deal with regulators and regulatory requirements if you can't do the paperwork or bring an inspector in? Or so, a lot of learning there that we're looking to turn into how can we just drive greater efficiency going forward in our businesses. I'd say coming out of the pandemic, it's clear in Canada, the green agenda is still going to really prevail. A lot of talk of build back better. We're the government moving on the plastics ban, which, and we in our sector, we stand to benefit from some of that, but we'll never celebrate a move to ban a product without a clear plan. So I'd say there's opportunities in our sector. By Christmas, we might have the first ever wood fiber based made in Canada biodegradable mask, which hopefully can get rid of some of those blue masks we're seeing on the sidewalk and the side of the roads. So a lot of other health, I would say, environmental related innovations we're seeing, partially linked to the pandemic, but also I would say to the continued environmental theme that's going to be guiding us through recovery.
Thank you. We have about 7 questions, so I will read them out, and hopefully you'll take the questions. Okay, so is the shortage in the cement concrete supply related to the pandemic situation, and is only situational, or is it more like a trend and more investment is needed in the sector?
Okay, I think it's really partially related to the pandemic. Again, when we were unsure as to what work could be done early in the spring, that had an impact on maintenance operations. In the first couple of weeks, I think people were expecting the economy to turn down. And really what we got in the summer was all of the backlog work that wasn't done in March and April got pushed to later on. Plus there was an accelerated demand. Like, again, everyone, I tried to buy deck boards in July and learned painfully that you couldn't do that in July. But again, it comes back to the seasonal nature. So for us, really, it comes down to we probably have another 6 to 8 weeks if normal demand conditions apply, where we're going to be in a tough situation. Then seasonal slowdown should kick in and the cement production will pick up. Again, they're producing cement 24 hours a day, 7 days a week. So we catch up a little bit on the weekends. We catch up at night. The cement plants are running constantly, but it's going to be a 6 or 8 week challenge for us over the next little while regionally, just here primarily in Ontario and Quebec. So it's not across the whole country.
Great, that's good information to have. The next question is, will there be a shortage or significant price increases for structural nuts and bolts and steel fasteners, example, nails and screws?
You looking for me to answer that one?
Sure.
I don't know. That's not necessarily my sector. I know I kind of represent the steel up the top side of things. And to a certain degree, I'm not permitted to kind of anticipate future pricing kind of requirements. But I'm going to have to say that's a good question. And from a bolting perspective, the raw material is somewhat the same. What I do know is there hasn't been any major variation over the last year in either steel supply. Prices go up and down like a yo-yo, and I'm the last one to be able to predict or be able to educate with any authority, be able to tell you what the prices are going to be in a week or 2 or 3 or 4. I'd love to be able to do that. But prices are dynamic. They're not only regional, but they're global. And it has a lot to do with scrap. Believe it or not, in North America, we don't make steel in most of our situations like we used to. It's all electric arc. So we pull out your old cars and your old toasters and your old scooters, and we grind them all up and we just melt it. So and that just keeps on going over and over and over again. So the price of scrap. So if you run and kind of anticipate the future, watch the price of scrap. If it goes up, that's a good leading indicator of what's going to go on in the short term. But overall, in the grand scheme of things over a year, pretty consistent.
All right, thank you. No crystal ball, Ed?
No crystal ball, unfortunately.
This one's for you, Derek. You mentioned that wood products are leveling off. Do you project that wood products will reduce in cost to closer to pre-pandemic levels? This person is experiencing a 30 to 40% increase in wood prices for projects that they're currently tendering.
Yeah, so similar to that, I can't get into the projection game at all, but I'll tell you about a few factors to watch. And I think the thing we need to remember is pre-pandemic was basically the basement in lumber. It was pretty low. So we did see about a tripling of prices over the course of a few months, but that's based on a really, really difficult 2019. So I'm always very careful about the comparisons of 2019 to 2020, because they're both kind of crazy years for very, very different reasons. But stepping back, and I saw another question just on US, when the duties come down, does that mean it really depends on a lot of factors. And there, as I said, I read the CIBC and RBC analyst reports, and you just do your best to try to stay on top of this. But I think there's a lot of other big plays going on. The very low interest rate environment is extremely interesting. The unpredictability of what happens if the president loses and doesn't leave office peacefully. Like I just think there's so much right now beyond our control that I would really hesitate to predict. But I will say that people need to remember that pre-pandemic was not a great starting point for the forest sector. We actually had a lot of hope for for 2020, and it materialized in a very different way. But prices were pretty low for quite a while through 2019.
Thank you, Derek. Yeah, a few more questions about prices, and I guess we'll have the same answer, which is, we can't predict, and you've given us some of your insight on where to look. So there was a question about increases for cold rolled steel sheet, but again, I think the panelists have said, look to the leading indicators in the economy. Another question around, I guess, probably more related to liquidity, and are we looking at a probability of an industry recession similar to what happened before? Any thoughts on that?
I'll maybe start with my kind of fears. The thing I fear is if and when the white collar job losses start to hit us. And that's not to disparage or speak ill of a lot of the more vulnerable workers who lost their jobs, because that's created and is going to create some long-standing consequences in our community socially, beyond just the economics. But what I wonder about in terms of one of those things is when do the people who are the home buyers in our communities and who are spending big money on home renovations, and if and when, for the most part, though, a lot of those people have been able to continue to work from home. But if and when we have an economic reckoning whereby some of our big corporations start shedding their workforces in a meaningful way, when our governments like Alberta, the health ministry, the agriculture forestry ministry yesterday, a couple thousands jobs lost. So that's kind of what I worry about. I worry about a lot of things, but I that's the one area where I think, despite low interest rates, if a lot more people making good money are out of work, that there's going to be real consequences for all of us on this call.
Agreed. Ed or Bart, anything you want to chime in with?
Yes. Well, I think we all, certainly in the construction industry, believe that the government's going to, see the light, and they're going to send some stimulus money down, and they're going to get some infrastructure going. And they realize that construction in the middle class, which construction is, will keep that, maybe that white collar and that high paid blue collar construction tradesperson in work, and the economy starts to move. What my concern is that the governments, both federal and provincial, have no mechanism to ensure that some of these large infrastructure and even medium-sized infrastructure projects will even go to a Canadian company. So, here's a great example of this is just a recent bridge in British Columbia, the Patella Bridge. And that's a new one. And it, for all indicators, suggests that thing is going to go offshore. So here is taxpayers' money going to be spent to stimulate another country. So if we're truly going to get Canada back on its feet, some of this infrastructure money has to have mechanisms in order to keep this business and this work within Canada. Our grandkids is going to pay for this COVID situation that we're dealing with right now. And it's going to start by Canadians, maybe. So if some of the provincial governments are just interested in the toys, but they don't realize the economic benefit of spending that money at home, and getting the Canadians back to work, we're definitely going to be facing an economic crisis. There's no doubt about it.
Certainly, we see on a point of alignment between the federal and provincial and municipal governments. Canada's put $180 billion into investing in infrastructure, which is fantastic. If you look at the 2018 commitments, however, there are billions of dollars that are still uncommitted. So there's a mismatch between what the federal government would like to see and then what provinces and municipalities would like to see. And so that's one of our priorities, is to help unblock that money and get it working where it needs to be to invest in Canada. So certainly that misalignment between Fed, Prov, and municipalities is a big issue in getting infrastructure funds flowing. Bart, any comments you wanted to make?
No, I think you've hit it, and we talked about it before too. I know we're talking about some of the short-term supply chain impact right now, but in the long run, we're concerned about future years and true investment in infrastructure, and will we see the necessary support for local economies by supporting construction going forward? And that's our concern in the years ahead.
I think just on that point, infrastructure, if we're going to, keep construction steady as you go, and I heard someone mention this, so this isn't my idea by any means, but if you're on the call, you'll know who it is. There needs to be consistent investment in infrastructure. We hear the various levels of the government talking about, well, we got to increase trades and we got to get the new apprentices going and whatever, but you can't do that if the governments are up and down like a yo-yo in their infrastructure spend. So get a little consistency and do a little bit all the time, year after year after year, and then we can do some of these things. So, I see some governments trying to tie some infrastructure a stimulus to some sort of KPIs, and they're using, apprentices and so on and so forth. The apprentices come with a knowledge that we're going to have long-term spending in infrastructure and a lot of construction over time. If there is a recession and not enough, like right now, we should have been working and stimulating the economy back in the summertime. And we're sitting on our hands, the government's sitting on their hands going, oh, I'll kind of wait for some reason. That exact example is why we can't get apprentices moving, and we can't get some of those things that the government would like to get moving because we don't have consistency in approach, certainly from a procurement perspective.
Yeah, and that goes back to the confidence factor as well. If businesses are confident that there is business and minimal red tape, then they will hire and invest. And that's our message as well, as is consistent and committed infrastructure investment, avoiding that boom and bust. There are a couple more questions here. Matt Holmes would like to know more about the steel shear wall. So maybe, Ed, if you have a minute, you could type in the link to it in the chat function. That would be great. Okay. There was another question about steel composite technology that was mentioned. So again, interested in that. So thank you, Ed.
I think maybe what anyone can do, they could certainly reach out to me, and I can flood you with all sorts of information related to that specific project and the technology. By all means, you can send me a link, and Mary will be able to give you my coordinates as well.
So there's a question on residential circuit breakers. If anybody knows anything about shortages of that and other electrical goods. Certainly that's something I've heard, but I'm not an expert in that area. No, we'll have to get back to you, Anthony, on that one. So a question on your current capacity utilization of your facilities, how much surge capacity is available if demand surges? So I think, Ed, why don't we start with you, Ed? I think you said you have capacity, but why don't we just go through each one of you?
Yeah, at the raw material stage, many of the mills in North America are stating that they're running around 65, anywhere from 65 to 75%. So there's a lot of capacity left, and this is why you see such an aggressive move by the U.S. on several trade cases against China and so on and so forth. Because they're just not able to get to full utilization of the boat. So there's a lot left over, and I know even the Canadian mills could certainly use a lot more orders. And we're starting to move into, as I mentioned, this kind of the soft point in the winter time. So I don't know, I'm sure all the other materials soon will be in the same boat. That you probably couldn't get a better pricing for materials moving into the winter time than you would now. So if you're ever thinking of doing some construction or building, you're going to get some pretty decent pricing out there, and lots of capacity for your project.
Bart, any comments?
Yeah, there's not much capacity right now. We're full out, but again, we do have a seasonal nature to the work that we do. So on the cement side, we expect some difficulties or challenges for the next 6 to 8 weeks, depending on where you are in the country. And then we'll again build up capacity as we normally do during winter months to hit those peaks during the summer. From a supplementary cementing material standpoint, though, I do have to point out there's maybe a more long-term challenge there. Slag and fly ash are the primary supplementary cementing materials that we utilize in the concrete industry. And again, we do have longer term impacts in those industries trying to find those products. So slag from the steel industry, fly ash from the burning of coal. There's less and less burning of coal across North America. So that's going to create shortages for those supplementaries in the long run.
Yeah, and just due to the process in steel making, there's less and less slag, because we're refining and making our product a lot more environmental. So just the nature of the process and what we're using in Canada and the US is just less slag available for the concrete industry.
In our mills, Mary, are the mills that are running, you know, as I said, there's a few 8 or 9 in BC that have been shuttered because of supply issues, but the ones that can be running are running. The one thing that I'm really happy about for the future is we were able to plant over 500 million seedlings during a pandemic without any major outbreaks, which is a huge credit to the governments and to the workers in the silviculture industry. It's a big thing. We need to be replacing what we're taking to ensure that we're keeping, you know, our industry and our forest vibrant for the future. And I'm really happy we're able to do that, because that's good news for capacity tomorrow.
Well, there are no more questions, and we're right up at 3 o'clock. So I want to sincerely thank my colleagues for coming on this call with me today, Derek, Bart, and Ed. And I know the industry's been, again, working very collaboratively together, and looking forward to working with you in the future. So thank you again for sharing your insights on shortages, non-shortages, and potential shortages and disruptions in the supply chain. So thank you.
Great, thank you.
Thank you.